Howard, I cannot help but think back to last Wednesday. The Capitol building in Washington was being overrun by a mob, and the Dow Jones Industrial Average was up 400 points. Is the market behaving rationally?
Well, first of all, of course, in the short term, the market certainly can depart from irrationality. Secondly, I think you're implying that we're in a bubble, and
no, I'm merely floating that as a possibility. I don't have an opinion either way.
Well, there's no reason you shouldn't float it as a possibility, and certainly. You know, the greater question is, well, why is the market making new highs every day if we have these problems? The political division in the country is a terrific one, but the greatest one, of course, is the pandemic.
That's an excellent question.
Yeah, but I really think that in large part, and this doesn't account for any one day's action. I think that the Fed and Treasury actions, and specifically the reduction of the Fed funds rate to zero, has had a very coercive effect on the market. It has required people to invest because they don't want to sit around with cash, money market fund, bank deposits, all earning zero. They don't want Treasuries at less than 1 or high grade bonds at 2. Mm-hmm. And so they've had to push out into risk assets. Stocks, non-gilt edge bonds. These are private equity and so forth. These are and venture capital. These are risk assets.
But not all stocks are performing equally. We've all seen the charts, and I'd like to put one up if we have it available, showing what happened over the past 10 years if you invested in the Russell 1000 growth instead of the Russell 1000 value. If you invested $100,000 in the Russell 100 growth, you'd have almost $500,000 today on a total return basis. And if you invested in the Russell 1000 value, you'd have less than $300,000.
What was the starting point, Eric?
Enormous, pardon me?
What was the starting point?
100,000. So
no,
you'd have
when?
5 times,
when?
10 years ago. So you'd have 5 times your money over 10 years in growth stocks, and you'd have something less than 3 times your money in value stocks. And that forms part of the evidence that another legendary value investor, Jeremy Grantham, points to say that we're heading for one of the mother of all crashes.
Well, look, first of all, there's no disputing the fact that growth stocks have outperformed value stocks. On the other hand, I think there's no disputing the fact that what are called growth stocks have a better future than what are called value stocks.
Well, some of them certainly do, but not all of them do.
Well, no, but on balance, they probably do. And of course, the ones that where the value is questionable have not been heavily represented in the S&P. The ones that have been in the S&P for the last 10 years are the great tech leaders that have been in the S&P for the last 10 years have probably been the acknowledged winners. But look, when one group outperforms another group for a long period of time, and to the extent you described, there's no question that it's possible that they're overvalued.
Howard,
the argument in the memo is that doesn't prove it's overvalued, because these are companies that have gotten better and better, that improve as they get larger and get stronger as they get larger, not bureaucratic and slow moving, but larger